Hi everyone, welcome back to Be Rich. It's me, Vinod, and I'm glad to tell you I've managed to pull Anand in from his busy schedule to have a conversation with us. We've been having an interesting series, just you and me, but today I thought we will pivot and talk about the impending Fed decision and why this Fed decision of all Fed decisions is rather important and we should be paying close attention. Is it going to be 0.25, zero point 0.5? There's a lot of speculation. The market seems to be factoring in a lot of things in its prices. So I thought it's a good time to get Anand to cue in and tell us what he thinks and where is the American economy standing and what is the Fed really thinking aside from all this political noise which we are being drowned in. So Anand, what's happening with Fed?
There are three parts to this. The first part is the politics. Trump wants to get control of the Fed. And if he gets control of the Fed, which he should at the end of next year, it will do a lot of damage to the independent institution of the Fed and irreparable damage to the US dollar. This is one. Because somewhere in June, Mr. Powell goes and it has to only pass by Senate, which he'll be able to, and he will get an yes man. Whether the yes man will remain an yes man or will become independent is something we have to see
Yeah, because Powell itself was put in place by him.
by put in place by him. So that we will know sometime in after he loses the House of Representatives, which means nothing much will move. Then there is a Supreme Court judgment which says whether he should take permission from the Congress for doing this tariffs. So these are the politics of it. And in the politics, he is trying to fire that Lisa Cook, which has not worked out in his favor as of now. And the more the globe feels that Trump is going behind the Fed, the more damage he will do to the dollar and stronger gold will become. Because it shows that people don't trust dollar as a reserve currency, major players, and they want to switch to gold. So this is point number one. Point number two, the market is baking in a big cut. I think Jerome Powell made a mistake by showing his hand in Jackson Hole by saying we will cut. Yeah, had he not said that, he could have got away with a 0.25% cut. Now the market expectation is there will be a 0.5% cut. The way gold has moved, the way the stocks have moved, the way the yields jumped yesterday, everything shows that
He's going to do
he is going to do the
zero point 0.5.
zero point 0.5. This is what the market expects. If he has sold them a dummy and does 0.25, then there will be a milder correction in the market. There will be some bloodletting in gold. There will be bloodletting in equity. And overall, then we wait for the next cycle. If he does 0.5, there might be a minor rally, celebratory rally, and dollar will weaken. Gold may either hold the level where it is or slightly go
Inch
up,
up.
inch up. The problem for Jerome Powell is the Federal Reserve has two mandates. It has to maintain the job level and also control inflation. Now, his two parameters are moving in opposite directions.
Correct.
The job losses are increasing, and at the same time,
Inflation.
inflation is creeping up. It's not gone up, but it's creeping up. And the effects of tariff are not yet fully felt. It will be till December, Jan when inflation goes up by 0.7, 0.8. So you may have a case of inflation at 3.5 to 4 by
New Year's.
just past the new year. It can be anywhere between 3. It's now 3.1. It can be between 3.4 to 4. Now, if he decides to cut at zero point 0.5, that means he's already made three cuts. So he's cut 1.25. Will he be able to have any ammunition? Because you will have a case where there's high inflation. And whatever growth in America today is there is because of this AI mania. More than 50% of America's GDP growth is coming on the back of AI and AI related investments.
And unfortunately, that doesn't employ too many people.
That doesn't not only employ too many people, there is a lot of hot air in that.
Correct.
And the MIT paper itself says there's a lot of hot air.
Yes.
So if the boom cracks, it's good news for America. But you will have a weakening economy, a weak dollar, but high inflation relatively because it's not come near 2%, which is the Federal Reserve's standard bear. And if it's hovering between 3.5 to 4, no federal chief will be in a position to cut beyond what he's cutting today. So if he gives a zero point 0.5, and it also aids inflation, and inflation doesn't come down, he will not be able to go beyond 3.75. Or if the inflation doesn't peak, you sneak in one more cut, it's 3.25 to 3.5. This is why experts have been saying something has changed. That a 20-year period where interest rates lower, where low is over. So you will not get 0% interest rates.
No.
So you will have inflation. If there is a 0.5 rate cut, you will have a creeping faster inflation. So Jerome Powell, whether he will reverse a cut or just hold it till June and hand it over to the next guy, which means that both growth and inflation will be in tough. You don't have growth. At the same time, you have high inflation, artificially caused by tariffs. He will have to push interest rates and bring down tariffs, which this guy will not do.
Yes.
So the chances are that in the late part of the Trump presidency, in the third or the fourth year, interest rates will have to go up again.
To combat the inflation.
Uh,
But most viewers are thinking, what is so bad about stagflation? Because Japan went through it and they
no.
managed to.
Japan did not. It shows your stupidity and that you do not understand. What Japan went through was deflation. Deflation is negative inflation. Stagflation is low growth and high inflation. If Japan had this, then interest rates would have been gone up, the economy would have recovered long. This is like high BP and low BP. So this is extremely high BP.
So
with
which is worse? What Japan went through, which is deflation,
is worse.
is worse than stagflation.
Worse than stagflation. Because after interest rates come to zero, there is no solution. For stagflation, there is solution.
What's the solution?
That is a Volcker solution. The interest rates go right up, gold comes right down, and then you have a problem. Problem is solved.
But there will be tremendous job.
But there's
Job
a
loss.
lot. There's a lot of pain. But there is solution. There is medicine. Medicine is bitter. In case of Japan, there was no medicine. Trump will not have to administer the medicine. The next guy who comes in will have to administer the medicine, and it will be very harsh medicine, which
So that means, in all likelihood, the Democrats wouldn't want the next presidency.
I do not know all that. Nobody thinks so long term. In politics, everybody thinks about the next week.
Because that's what happened to Obama when he was handed over the basket from Bush, right?
But he handled very well. No, he could cut interest rates. He could give free money. The next guy can neither cut interest
But
rates.
that's what his legacy and what he's been blamed for is the zero interest.
But
free cash
it was not his creation. He did best he could.
So you feel if anybody was the president at that point in time would have had no choice,
they wouldn't have a choice.
even if it was a Republican.
Even if it was a Republican. Because one thing you understand, these are the solutions. Whether public likes it or not, the solutions have to be there. For that time, the solution was injecting cash. Had they not injected cash in 2008 and 9, the whole global economy would have bulked.
Yeah, that's because of riding on dollars back.
No. Basically, the payment systems between the world would have. I do not know whether you have money.
Yeah.
So
If you'll honor the
payment. So I can't. I won't even lend.
the check will pass or not, we don't know.
Yeah. So the bank will not to lend to another bank. Forget lending to me as a consumer, and I will not keep the money in the bank because I don't know whether my bank is safe.
So they had to step inside and reassure everybody.
They had to do that. They had no choice.
But will Trump's whatever he's doing, would it lead back to that something similar like that or something different?
I don't know how they are going to play it. They have to increase interest rates big time. If inflation goes up, and AI growth still remains, then interest rates have to go up very fast. But imagine if there is no growth and high inflation, even then interest rates have to go up.
To combat inflation.
Yeah.
So But
So,
why
but
would you?
all that is in the fourth year of Trump. We are in the first year of Trump.
Correct. But my question is, regardless of AI growth or not, as long as the tariffs remain, inflation is for certain, right?
But he's saying there'll be no inflation. He's saying he has cut the taxes here, there, and all big, beautiful bill. I have not done the numbers. Goldman Sachs has crunched the numbers and say the inflation will go up by 0.8%.
By
That
next year,
by the end, by Jan.
unless there's a dramatic change in tariffs.
Yeah, so he is saying from 2.8 it will go up to zero point 0.8. That's why I said 3.5 to 4 is what they are expecting. 3 point, it's already at 3.1 or 3.2.
Correct.
So 3.1 plus 8 is zero point 0.8 is 3.9. 3.9 means interest rates cannot come down, they have to go up.
They have to go up. So there you
But that
go.
is in the fourth year.
That's in the fourth year.
Yeah.
Okay. So there you go, Isco. We have a lot more uncertainty from what it seems. Like I said, and kind of explained it to you in a very nice manner. I would say that what we have is a lot of uncertainty because we do not know where the inflation is finally going to land. And the inflation is completely pegged on tariffs. And tariffs, we do not know if he can hold these tariffs at these levels or Trump might do
The
another.
court strikes it down, it's all over.
Yeah, he may use that as a out and say, see, guys, I wanted to do this for you, but these Democrats are using the court and they're bullying me. He might do something like that and blame somebody else and drop the tariffs. It's quite possible. If that happens, then it's game on as far as the American economy is concerned. Then all eyes will be on the AI bubble. If the tariffs manage to continue till mid next year, then inflation goes up almost by, like Anand said, another 0.8. Then we really do not know, regardless of the AI bubble or no AI bubble, tariffs are going to be hammering the American economy. So, all said and done, we really do not know which way this pancake is going to land. Keep your eyes on, keep your eyes peeled, and be safe in your investments. And don't expect gold also to remain steady as it goes up. It will have a volatile time. That's also what Anand is saying. It all depends on what the Fed does and what happens with inflation. So even gold during the next 6 months to 9 months is going to be very volatile. Anyone who says very vehemently they can predict gold in any direction is crazy. So anyway, I hope you found this video informative and entertaining as always. And me and Anand wish you a great evening from here in Birich. Thank you for supporting Birich today.
Thank you for supporting Birich. I hope you like this video.